Ladies and gentlemen, good day and welcome to Kaveri Seeds Q2 and H1 FY21 results conference call. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Rishabh Barar from CDR India. Thank you, and over to you, sir.
Thank you.
Good afternoon, everyone, and thank you for joining us on Kaveri Seed Company Limited's Q2 and H1 FY21 conference call. We are joined today by Mr. Mithun Chand, the Executive Director. Before we get started, I would like to point out that certain statements made or discussed on the conference call today may be forward-looking in nature and must be viewed in conjunction with the risks we face. The company does not undertake any responsibility to update them. A statement in this regard is available for reference in the presentation. We will begin the call with opening remarks from Mr. Mithun Chand, who will share updates on the market environment and take you through the strategic imperatives of the company. He will also share his thoughts on the performance of the company during the review period. We will then have the forum open for an interactive question and answer session. Now I would like to invite Mr. Mithun Chand to share his views. Thank you, and over to you, sir.
Thank you, Rishabh. Good day, everyone, and very warm welcome to all of you. I hope all of you are safe and healthy as we battle across the pandemic together. We are happy with our progress in the quarter and half year under review. For first half 21, revenue stood at 853.5 crore against 745.23 crore in first half last year, a growth of 14.53%. Operating EBITDA margins, excluding other income, stood at 35.57% in first half of 21 versus 34.27 in the corresponding 6 months. PAT at rupees 319.82 crore is higher by 31.2%. Our balance sheet remains strong. Total cash on books as on September 30, 2020 stood at rupees 481 crore, a 41 crore increase from 440 crores as on September 30, 2019. Almost all this cash is invested in mutual fund schemes of varying durations. The board of directors have recommended an interim dividend of rupees 4 per equity share of face value rupees 2. Moving on to our business performance. We have gained market shares in cotton in Gujarat and Haryana, while there have been some losses in Telangana and Andhra. Our new products, including KSCL, 111, Moneymaker, and Wiplo, had all performed encouragingly, translating to an improvement year-on-year in new product contribution from 31% to 35%. Industry-wise, cotton acreages have been largely stable. Some states like Gujarat, Maharashtra, part of Tamil Nadu have seen some decline in the acreages due to the increasing attractiveness of other crops like soybean, groundnut, and chilies. In line with our business strategy, the growth in our non-cotton portfolio has been particularly strong at 35.58%. Volume growth in new hybrids combined with good price appreciation of our key products contributed positively. Maize volumes increased by 36.78% in first half 21, with contribution of new products increasing to 8.34% of the volume. Overall, maize acreages have been stable. Heavy rainfall in October and fall in prices is, however, likely to see a decline in acreages in the Rabi season. Volumes of hybrid rice, selection rice, and vegetables have all grown extremely strong on the back of successful product introductions. Hot pepper, okra, and tomato all have driven this growth in vegetables. Kaveri Seeds has also featured in this year's edition of Forbes Asia's Best Under $1, being among 200 Asia Pacific public companies with less than $1 billion in revenue and consistent top and bottom line growth. Going forward, we expect our products in maize millet to contribute to show good growth We all are very positive about the prospects of our vegetable portfolio. Heavy rains in October combined with muted commodity prices may see pressure in cotton and maize though. On that note, I conclude my opening remarks. We would be very happy to give you our perspective on any questions that you have. I would request the operator on this call to open questions and answer session. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone phone now. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Question, please, star followed by 1 on your touchtone phone now. We have a first question from the line of Rohit Nagraj from Sunidhi Securities.
Yeah, thanks for the opportunity and congrats on good first half performance. So the first question is on cotton. So in the commentary, we have suggested that the prices have been lowered and the inventories have been high. So what is your expectation for next Kharif season? And in terms of our seeds, how are we placed for the next season? Thank you.
Particularly in terms of cotton, we see that the areas may remain stable, not much decline. As of now, it looks like 5% plus or minus from these current levels. That should not be much of a difference to our sales and our forecast. But the other point, what we need to understand here is that we have very limited options to replace cotton. So I think the cotton acreage will remain sideways of 5% next year. And in terms of the inventory, we are hoping that 10% growth in the cotton. For that, we have started producing it, and we are in line with it.
All right. And second question again pertaining to cotton. So we have mentioned that the HTBT sales have been about 50 lakh packets. So any action against that? And so next year again we would see a similar kind of intrusion from HTBT?
Governments, both the central and state government is taking strict actions on that, but still we are seeing HTBT getting popular in the markets. I think again we may slightly increase in the HTBT as of now, but it's too early to say because we have mixed opinion on HTBT this year, so it should remain sideways.
Okay. And yeah, just one last question on guidance. So what is the updated guidance for FY21 now?
Sorry, you are talking about this year?
Yes, this year. So earlier we had, I think, 10 to 15% overall growth with about 15 to 20% bottom line growth. Now first half is done and the cotton has been slightly muted. So how do we look for the FY21 now?
Like you said, we are trading between 10 to 15% growth in the top line that we have already witnessed in the first half. Second half anyway is a lean quarter compared to the first half. Even in second half, we had a very good season last year. We had very good maize last year. This year, by seeing the commodity prices and especially some state governments are discouraging maize, so that may impact the maize acreages this year. And being at Kaveri, we had different portfolio. We have rice, wheat is going in some parts, and we have vegetables. So I think we can do in the same sales as last year. I don't think it should impact much as our top line. But the growth we need to see. Once the season starts, we'll let you know. Anyway, it's very important to not impact much on our profitability or top line. And we are doing season is done.
Thanks a lot and best of luck.
Thank you.
Thank you. We have next question from the line of Nitin Awasthi from East India Securities. Please go ahead.
Hello, sir. Number of questions from my side. I'll start with maize. So, like you said, many state governments are discouraging the cultivation of maize because of the lower prices of maize currently, hovering in the market. So, what do you expect? You expect to do the same numbers that we did last year in maize, or actually lower because you will also suffer due to the market shrinking, or will you actually gain market share and be equal to last year?
In terms of the maize, we have very good market shares in the areas where we operate in Rabi. But definitely by seeing the last year to this year, the maize acreage will be down, and we will be impacted by the downfall, and the maize sales will be impacted. But as a whole at Kaveri, because we are doing very good in vegetables and rice and wheat, we have produced enough wheat this year, so that may compensate the losses in maize. So as a whole, we don't see much of an impact on our top line.
Okay.
But if you talk in particular about maize, definitely there is an impact.
Okay. And so secondly, on rice, have the realizations sharply dropped, or is there something which is amiss that we are missing? Have the realizations per kg, per bag, or whatever, however you calculate it, compared to the previous quarter, have that dropped significantly?
No, it's in line. Slightly, the cost of production has gone up this year, and we were not able to increase the prices in rice segment. That's the reason we are seeing a slightly increase in the cost of goods. Otherwise, it all remains same. Okay, but the selling price per kg, etc., is similar to last year. And yes, slightly a 2 to 3 rupees realization drop in some varieties of rice.
Okay. Okay. And this time around, vegetables, this quarter, for the first half, it has seen an amazing growth. But for this quarter, we have been on the little downside on the vegetable front. Although we have launched a lot of varieties and etc., but any particular reason? What I'm trying to get at is that because of the varieties that we have launched, will the growth be seen in the second half? And was that launched at the later stage of the quarter?
If you see in the last quarter, last year to last year, and last half to half, so last half to this half, and in particular the second quarter to second quarter, even we have done better in vegetables in quarter-on-quarter basis. But usually second quarter is a lean quarter for vegetables, and the second half it will be good. So we see a similar type of growth in the second half also in vegetables.
Okay. And sir, any Telangana and Andhra happen to be our strong foothold when it comes to the cotton market. And when you say that you have lost market share in these space, so have you lost it to HTBT or have you lost it to other competitors?
Some towards HTBT and some towards the smaller companies. Because that's the main thing, because we were realizing more there was price competition was also there. And if you see, in fact, in the last 5-6 years, we are losing market share in Andhra and Telangana, but we are gaining other parts.
What is the reason for that, sir? If you could just shed some light on that why are you losing market share there where you had a very, very strong foothold? And why are these smaller companies being able to take away the market share from a giant such as yourself?
Basically because of the price competition, and we have not introduced many new hybrids in these areas. That's one of the parts. And if you see in the last 3 years in terms of the overall sales, we all remain same. I don't say that we are lost heavily in Telangana or Andhra. We have remained there. In fact, we are slightly gained in terms of the volume also. Slightly, but not in line with the overall sales.
Okay. And any steps being taken by the company to address this issue of not being able to launch new varieties in these areas?
Nothing. We are launching in hybrids, but we are not able to capitalize a lot we were able to do, because most of the varieties may not be suitable in most of the areas. For example, the hybrids which we have launched are doing very well in Maharashtra and Gujarat. We have gained market share in Maharashtra and Gujarat. Even in Haryana, Punjab, we have increased the market share. Only in the part of Telangana, not even in AP, only in the part of Telangana, that too in 1 or 2 districts, we are facing issue. Otherwise, it all remains same.
Okay, sir, got it. So just one last question, and this is from a strategic view on the company, that if you look at some countries or some regions in the world which are adopting GMO technology and hybrid technology very rapidly, and India doesn't happen to be one of them. So if you see places like Bangladesh, our neighbor, and countries in Africa just going gung-ho over hybridization and GMO. So do you think it's not wise as of now to set up subsidiaries in these countries and capitalize on this opportunity?
In the question, there are 2 points. One is hybrid, the other one is a GMO. GMO is like the central government, as a government issue, they need to give licenses to adapt it. That the GAC committee will take the call on it. We don't have any call. But when you talk about the hybridization, India is already hybridized. For example, you see cotton, more than 95% is hybridized, maize more than 70% is hybridized, sunflower is hybridized, rice is picking up. So wherever there's a possibility of hybridization, it's picking up in India as well. So I don't see any issue in terms of picking up of hybridization. We are in line with many countries and in fact far better than many other countries. But only in GMO, that's the government decision. Based on the government decision, we'll adapt it. We have only one GMO, that's in cotton, which is because it's non-edible. That's the reason we are using it.
Okay, sir. Thank you so much for answering the questions. That's all from my side.
Thank you. A reminder to participants to ask a question, please press star and 1 on your touchtone phone now. We have next question from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Hello.
Yes, sir. Please go ahead. Can hear you.
Yeah. Sorry, it's not Ayush Mittal, it's Ayush Agarwal from Mittal Analytics only. I would like to ask my question, sir. There are some rumors flying around that the company is facing some tax-related issues from the past and some litigation might happen against the company. Would you like to throw some light on that?
As of now, we don't have any pending issues. If you see in the annual report also, we clearly mentioned what's going on. There's no pending liability or pending notice which is there at the company side. There's a search and we have filed a case on that, on the search proceed that stayed in the court. That's the only thing that we have clearly mentioned in the annual report. Apart from that, we don't have any other issue.
Sorry, which one, sir?
We don't have. What I was saying is that we don't have any pending litigation or pending orders or anything from the income tax department.
Okay.
We had a case-related search that's pending in the court.
Okay. Thank you so much.
Thank you. In the interest of time and fairness to all participants, ladies and gentlemen, please restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We have next question from the line of Amit Vora from PCS Securities. Please go ahead.
Good afternoon and thanks for taking my question. What is the update on buyback? Anything? Just wanted to understand.
Yeah, we have. That's again a subject to board decision, but anyhow, we were distributing the cash for the shareholders and last buyback we have completed sometime in the last month of this year, January. As per the rules, we only need to start after 12 months, so based on that, we will take a call.
So that's on track. I mean, either you
our intention, as of now, our intention is to distribute to the shareholders, but again, as I said earlier, subject to board meeting, we'll have a discussion post 1 year of that.
Right. But other than that, because we have already intimated that we do not have any capex plan, or neither we are looking for any strategic, buyout to grow inorganically. So ideally, you will be looking to distribute that by way of buyback because dividend already you have announced.
Yeah, as of now, our intention is stays intact with what we had in the earlier years. Still, it continues.
Sure.
We need to see.
Okay, and a few things on the working capital. So our inventories have gone up from last year September to this year, and receivables also. So these inventories are pertaining majorly to paddy, cotton, or what is it? Can you give some color here?
I think inventories only in cotton we are slightly up compared to previous years, and we have produced more. For this year, as you see, we have grown more in cotton, non-cotton, and especially non-cotton segment. This is the inventory, and cotton we were not able to sell as per the anticipation. So that is a pile-up which is there in the September end. But if you go back to go by the year end also, that is slightly increasing the inventory because we are anticipating more sales in the coming years. And most of the inventory is already empty, so we don't have much stock.
Okay,
so it's some crop. So we are in line with it, nothing of that sort.
Okay, and the receivables which have gone up from September last year to this year September also, that is majorly related to?
Not much, basically. In fact, we had good collection this year compared to previous years. some sale happened in the second quarter that might be impacting it. Not much.
Okay. So we are not.
So we don't see any of the bad debts or any of the write-offs in that.
Okay. And this quarter, compared to last quarter, also last year, we have booked a decent portion on other income. So what is it that we are looking for the full year in terms of booking other income? Because last year, second half, majority of the other income had come through.
So basically, in the first half, second half, basically, if you see historically in the last 3-4 years or 5 years, we are getting another income in between 30 to 50 crores. Even this year, that should be the range.
That should be the range.
But some might have matured in the first or second quarter. Based on the maturity, we book we show the income in the respective quarters. So it should be in the same line as last year, not much.
Right. And one investment we have in this Franklin, I think, Schlan, that has no impact with the ongoing issues with the Franklin mutual fund?
No, we don't have any. We have already disclosed every investment in the annual reports. We do it in the quarterly things also. As of now, we don't have any impact on that.
Okay. And one last thing. Have we got any inventory write-off in this quarter particularly?
That's a routine process. Every year we have a write-off. Definitely we have some write-off, and going forward also we'll have some write-off.
Yes. What would be the number in this quarter?
In line with the routine activity. Every year we do it, and this year also we do it. Not anything significant.
No, what would be the number in this quarter? Because I remember last quarter you had given a number for the write-off that you do as the routine prudent accounting practice, but what would be the number is this time?
So usually what we do is that for the entire year it should be between 15 to 20 crores. Even this year it should be in line with that.
Okay, thank you so much. I'll get back in the queue for follow-up.
Thank you. We have next question from the line of Abhijit Akela from IIFL. Please go ahead.
Yeah, hi. Good afternoon, Mithun. Congrats on a good quarter, and thanks for taking the question. Just to check about the employee cost increase in this quarter, there's quite a sharp increase. So, any color you could put on that?
One, the headcount is also up. We have given increments this quarter, so some is loaded in the second quarter because we were not able to do in the first quarter, so we are giving in the second quarter. So that's something is there, and even the ESOPs cost is also added in the employee cost.
So this number should decrease from 3Q onwards on a quarterly run rate basis?
Yes, because ESOPs is also added, definitely it should go down next quarter. So that's marginally, 2 or 3 crores, not much.
Okay, got it. And the footnotes to the accounts mention about write-offs at one subsidiary. So, I mean, what are the plans? Does Kaveri need to put more money into that subsidiary, and how much amount would be increased?
Nothing. That was a very small subsidiary where we had a 50% joint venture with the other partner. That we have stopped the operations in the last 2-3 years. Nothing there. The write-off is basically that the seed more than 2 years which is not recovered. So we as a procedure we take it as write-off. That's the only write-off. Still we are collecting the amount, but the operations is already stopped with that company for the last 2 years.
Thank you, sir. We have next question from the line of Chetan Thakkar from ASK Investment Managers. Please go ahead. Good afternoon, sir.
Good afternoon.
Hello. Hello. Am I audible, sir? Yes, you. Please go ahead. Yeah. So the question was on market share gain in maize. Just wanted to understand where have you gained market share in maize, and also is there some tender business in this maize revenue?
We have gained market share in most of the parts. For example, wherever we have operated, especially in Karnataka, Maharashtra, Northern India and some parts, we have gained market share in those parts. And over and above that, we also participated in some tenders. Even participation in tenders is also a routine activity. So it's a combination of both.
So but it's not that tender driving a large bit of the volume. That is not the case.
Sorry?
It is not the case that tender is driving a large bit of the volume growth. That is not the case, right?
No. Yes. No.
Okay, sir. Thank you so much. Thank you. We have next question from the line of Vidit Shah from IIFL. Please go ahead.
Hi, thanks for taking my question. Just wanted some clarification on the tax rates for the company going forward. So, this quarter we had some benefit from the earlier years. So just want to understand what benefit that was and what we should assume the tax rate for the year.
In terms of the business, we claim it as an agriculture income and we don't pay any tax on that. But the tax reversal, what we are seeing in the second quarter, basically on the mutual fund investment, when we take out, we provided for full taxation. But that came with the indexation, we were supposed to produce less. So that came back in the second quarter. Only on the returns, not on the business tax.
So ideally, you'd be paying tax only on the 40-50 crores of other income that you.
Yes. That we have provided a higher tax slab, and based on indexation benefit, it was a bit lower. So that's what we were asking.
Okay, got it. And secondly, can you just throw light on the performance of the subsidiaries? I mean, I see that the revenue has grown sharply, but the margins have come down in the subsidiary financials. So what has led to that?
So basically, there are two subsidiaries, in fact, three subsidiaries, but majority of that is done in the Aditya Agritech, where we have 70% of the holding in that. So that again, Kaveri is a company where we produce and most of the profit is captured in Kaveri only. So that is basically a trading company. That's the reason you don't see much of a margins in that.
Okay, but the revenue has gone up, I think 26% across the section.
It's a small fee. It's like 10-12 crores of revenue, not more.
Yeah.
So that number looks big, but in terms of that, very small. And the costs have also gone up in that. As we capture the majority of the profit in the main company, so trading profit will be there in that.
Okay, fine. All right. Thank you so much. And all the best.
Thank you, sir. We have next question from the line of Prasanna Sankaranarayanan from Rippling. Please go ahead.
Hello, sir. Thank you for the opportunity to ask a question. So I didn't quite follow, sir, when you said guidance for the next year, not this year, the next year. So this year we have sort of already done more than 50 rupees in earnings per share. Next year I saw that the outlook has mentioned, poor cotton prices and maize prices. So what do you sort of guide now? I didn't catch that part when you mentioned.
Basically, the outlook what we are given is for the second half and the sentiment part. Maize we see a decline in the second half, but for the next year, it's too early to predict about maize because the maize price has been impacted because of the pandemic conditions. Once the export and everything goes on, we see the maize price improving. And yes, in terms of the cotton, we see a stress in the prices going forward also. But in India, we don't have much of an option to replace cotton crop. So that's the reason we say 5% plus or minus of the present acre years. But very, very unlikely that it will go up. It should only come down as of now. But in terms of our presence, and we have launched new products in cotton, I think we will be able to maintain our market share. In fact, we are hoping for a increase in the market share for the next year. So we are not worried about much about that. And even maize is too early. We are penetrating in other parts. We see a very good prospect for maize, especially for all non-cotton crops, including maize, rice, and vegetables.
I see. So, for next year, it looks like there isn't like a major impact, and the guidance is maintained. The 7-year guidance, like right now we're doing something like 55 rupees or something in EPS. So is it like 15 to 20% on bottom line growth from there? We can expect like 65 rupees or something next year.
Yeah, our long-term guidance looks same. There's no change in the guidance at all.
Got it. So from a next year perspective, we still sort of expect growth from whatever we are. That's great, sir. Thank you so much. The other question I also wanted to follow up on the other shareholders' question, which is basically, from the ground, I hear reports that we are losing market share to Rasi seeds, as you mentioned, in Telangana and some parts of AP. How worried are you that is actually indicative of, perhaps you losing market share in cotton in other places as well? And like what I mean, from your response, it looked like it is sort of isolated, and the company is just taking that as okay, we're going to lose market share in these areas because of pricing competition. But that's okay. We can value add our products, value add in other areas. So we're just going to take market share in different areas and lose this in this particular area where the products are not differentiated. Is that how you're thinking about it?
So basically, if you see overall acreages this year, if you see the comparative statement, acreages are slightly up in cotton. But if you see the major acreages are up in Telangana. And whereas the other states like Maharashtra, Gujarat, all the states have lost in cotton. But if you see our volume remains same as it is last year. Even though the other areas were down, we have increased our market share in Gujarat. We are able to maintain our volumes. We are able to maintain our volumes in Maharashtra. We are able to maintain our volumes in other states. So this clearly shows that we have increased market shares across India, apart from Telangana. Even in Telangana, there are few districts where we are not able to grow the size. We have not lost volume in that, but we were not able to grow in line with the markets. So that's the reason we said that slightly we lost in Telangana. But we are putting our efforts. We are trying to introduce new hybrids in these areas. But it will take some time. That will not reflect immediately in the 1 or 2 years. But at the same time, I need to say this, that we don't have any threat further going down in terms of the market share. We'll maintain our market share. And we are much better than any other company. That's also one of the points in Telangana where we are not able to do, because Telangana basically is all about credit markets. We have stopped giving credit to many players. So that's one of the points. Strategically, we don't want to give credit in these areas. That's also affecting to some extent.
Got it. Understood.
And if you see the receivables also compared to previous year, even in this pandemic condition, the receivables are slightly up by 10-15 crores. If you see the overall volume of sales, they are up by more than 100 crores. So we are able to collect the entire money, and we have realized much better than many other companies.
Got it. Thank you, sir. One final question is about exports. Again, another gentleman asked about that, about opportunities for exports and, potential things that the company is exploring. Can you perhaps talk a bit about that?
We are already exploring many export markets. In fact, we are almost trying to export 9 countries. But as of now, we are doing majority of the revenue from Bangladesh. This year we have got impacted because of Pakistan. Last year we got impacted. We were not able to sell to Pakistan. Again, this pandemic conditions, we are not able to export freely. But anyway, we have a very good scope. Our focus is on export market in the long term, and that we are already continuing to do it. And if you recollect in my previous calls, I was saying that it will take 4 or 5 years to get a meaningful sale, but year on year definitely will grow in export. That's what we are witnessing. We see a good prospect in export going forward.
Thank you very much, sir.
Thank you, sir. We have next question from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
My question is, what is our market share as on today in India? And secondly, what is our return on capital employed and return on equity?
In terms of the market share, we have close to 8 to 9% market share of the total hybrid seed market across India. In terms of the ROE and ROC, it's there in the presentation we have already uploaded with the website and the exchanges. Right now, I don't have that figure, but the information is already provided in the presentation.
Okay. I will just go through. Thank you very much. Thank you.
Thank you. We have next question from the line of Chetan Doshi, an investor. Please go ahead.
Good afternoon, sir. Congratulations for the excellent numbers. My question to you is for the current quarter, that is October to December. Can we expect the same what you have repeated for September? And for the year end, you have a target of crossing 1,000 crores for this March 21. In COVID situation, if you can do it, that will be a great achievement for the current financial year.
Yeah, in terms of the coming quarter, we will be in line with the last year numbers, last year quarter. We need to see. We anticipate a good quarter for Kaveri, even though we see a slight decline in May, but overall it should look well. But to be on the safer side, I can say that it will be in line with the last year numbers.
So you have mentioned clearly that you are growing in other product line compared to, means non-cotton is your focus area. That is what I see from the presentation. So for the current quarter, you are expecting some specific sale from some product which you can share. That in current quarter, the main focus will be the revenue will be generated from so and so product.
So basically, in the second half, majority of the revenue contribution will be from corn. That is maize.
Okay.
Now, by seeing the maize prices and by seeing the few governments which are discouraging maize, that may impact the maize acreages. But at Kaveri, because as we are there into many other products like rice, wheat, vegetables, which are in a growing phase, so we don't see any decline, and because we don't see any revenue impact, even though the maize volumes are down. So in that way, we are better placed than any other place in the market.
Yeah, our product mix is very good. Are we into basmati rice also?
No. We are not into basmati segment. We are basically the majority of the revenue in the hybrid rice, what is medium standard.
Thank you. We have next question from the line of Manish Shah, an investor. Please go ahead.
Thank you for the opportunity, sir. Sir, Telangana government has...
Sorry, can you be a bit loud? I'm not able to hear.
Yeah, Telangana government has the directive for 50 lakh hectares of rice in October to December quarter.
Sorry, I'm not able to understand. Sorry.
Telangana government has directed for 50 lakh hectares of paddy cultivation in the Yasangi season. So we will be benefited for that?
Definitely, to some extent, definitely we will get benefited. And if you see the revenues in rice are more in Telangana also this year. But the majority of these varieties are the government varieties. They are not the hybrids. So we may not take the full potential of it, but definitely we are growing in this market.
Sir, another question is about the maize, which the government is trying maize for ethanol. So they are to come for a policy in the next 2-3 months. So that would be very beneficial for us in the long term?
Yes, definitely. If you see maize as a crop for the long term, it's a very good crop, and that's the reason we are focusing more on maize crop. Maize, I think going forward, maize will have more value than another crop in India. With the present government initiative, definitely maize will be a preferred crop for the farmer going forward.
And sir, the maize prices have already started recovering in some parts. So I don't think it should be a problem in the next 3-4 months as such.
Yes, but by seeing the maize prices, which is like 13 to 14 rupees now, against 20 rupees last year, so the sentiment is down. But if you see the maize prices recent month, where it went up to 10.5 rupees also, now it came up to 13.5, 14, and the yields are good this year. So that's one of the points where we need to see. That's the reason I say that maize will not be discarded as a whole, but slightly decline in the acreage.
And sir, this employee cost, is it one-off only in this quarter only? It will not be repeated in the second half?
I think it's slightly reduced in the second half because some is loaded even in the employee cost for the second quarter. Basically, the increments and the ESOPs is also added into it. That's the reason you see a larger picture, bigger picture, but definitely slightly lower in the second half.
Thank you very much, sir.
Yeah.
Thank you. We have next question from the line of Rohan Modi from RSL Advisory. Please go ahead.
Hello, sir. Hello. Hello.
Please go ahead, sir. Yes, we can hear you.
Sir, why are we doing the tender offer in buyback instead of open market? There is a 30% difference in the tender offer buyback price.
Sorry?
Why are we doing the buyback in tender offer instead of open market buyback?
Yeah, we have stated earlier, it's a board decision that is taken. Definitely, we want to distribute everything to shareholders, and I think we are done it.
But there is a open market, there is a price around 500 rupees, and your tender offer is around 750 rupees. So there is around 30-40% saving we can achieve by open market buyback.
But anyway, that the shareholder will getting benefited out of it. So that's a different thing. We can't get it in that way, but definitely we'll consider this. We'll again discuss in the board meeting.
Okay. Thank you, sir.
Thank you. We have next question from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Yeah, hi Mithun. So my question is regarding assuming already the previous year H2 has a high base because of better sowing of rice in south. So assuming that, can we expect decent growth in H2?
So for H2, for last year, majority of the contribution was done by May. Usually in H2, it's contributed by May. But this year, compared to previous year high base, May temperature is likely to decline. So that's the only worrying point. But otherwise, I think we can maintain ourselves as revenues, as we can compensate the lost revenues in maize and other crops like vegetables and rice, and in fact wheat. So I think we might maintain the sales as last year, even though they declined in the market.
In the previous year also, rice has done well, right?
Previous year, compared to previous year, we will be growing in rice, vegetables, and slightly down in maize. So overall, we see that the same revenues might be maintained this year in the second half.
Thank you, ladies and gentlemen. Please restrict questions to 2 per participant. We have next question from the line of Deepak Kole from B&K Securities. Please go ahead.
Good afternoon, sir, and thanks for this opportunity. Sir, what are the reasons for decline in the other expenditure in this quarter? And my second question is, Rabi season already started, and currently, sir, do you see any changes or a shift in crops? Thank you.
In terms of the other expenses, royalty was also part of the other expenses. This year there was no royalty. That's the reason the other expenses are down. And the other part, coming back to the second half sales, I was already repeating the same, is that the acreages in maize might slightly come down, but rice and wheat can go up, and some grams. So that's the scenario as of now it looks like.
Is there any other item than royalty, sir, which has come down?
Some expenses in the first quarter because of the pandemic conditions, there was not much movement of the employees, so that's one thing slightly down. But that the other expenses like freight and other things have gone up. So there are different components in the other expenses. So it's a mix of that which is reflecting in savings.
Okay. Thank you, sir. Thank you very much.
Thank you. We have next question from the line of Manoj Shah from Laxgov Investments. Please go ahead.
Yeah, good afternoon, gentlemen. My question is with the water reservoir level in southern India at a decadal high. So how do you see the growth of your company in the southern side? And even if the rainfall, the next 2 years, it doesn't have a good rainfall in southern India. So how this high water reservoir level, can they cater for next 2 years of irrigation?
See, this year we have seen a very good monsoon, and last year also we have seen a very good monsoon. Most of the tanks are fully groundwater has improved. But anyhow, we require right monsoon. I mean, the in-time monsoon for a proper sentiment and for these proper crops to come in. Even though the groundwater is high, we require good monsoon next year. So to have a normal every year. And definitely improved groundwater and this type of rainfall and good productivity will definitely encourage farmers to invest more in crops, especially like seeds and in crop production for a better harvest. So that's a good sentiment to have to start with. But definitely we require good monsoon again.
So what kind of a growth you are expecting over the next 2 years with already good water level, with back-to-back monsoon, and farmers having good crop income? So what kind of a growth you are expecting over the next 2 years?
We already given a guidance. We had a long-term guidance of 10 to 15% top line growth and 20% bottom line growth, slightly better bottom line growth. That we are already doing it, and the long-term guidance remains same.
Thank you. We have next question from the line of Shashank from Value Educator. Please go ahead.
Thank you for the opportunity. So from last 2-3 years, we have shown an excellent growth in our paddy segment. So I wanted to ask you, what is your assessment on the paddy as particularly to our company and with the overall sector also? Like, can paddy be the next kind of a crop like a cotton, which it was like growing from 2010 to 2015 maybe? And like, what would be our target in like next 4 to 5 years? Can paddy maybe beat the cotton in our portfolio?
We were always positive on paddy crop, not only in terms of Kaveri. If you think the overall industry, paddy is growing 43 million hectares across India, whereas cotton hardly 12 million hectares. Paddy has got a potential to always beat cotton revenues going forward. And the hybridization is also picking up in paddy. And not only that, in particular to Kaveri, we have good hybrids which we have launched a couple of years back that is gaining market share. And in fact, we have grown more than 40-50% in the last 4 or 5 years. As of now, we are in the top 3 in paddy, in hybrid paddy. And in the next 2 to 3 years, in the short term, use will definitely tend to grow. Not at 40-50%, definitely about 20-25% in paddy in the next 2 to 3 years. And with this type of growth across both in hybrids and varieties, definitely we will grow much better in paddy. But almost cotton is double the paddy now. So in the next 2 to 3 years, it might be difficult to beat cotton revenues going forward. But as a fact, maize and as a non-cotton segment, definitely if you see this year we have grown by more than 35% in non-cotton segment. And if you compare first half to first half last year, cotton was contributing 60% last year. This year it's only 52%. So again, as we are giving the long-term guidance of going like saying that 40% cotton, 60% non-cotton, we are going in the right direction, and that definitely will help us to improve margins, and definitely will go in that fashion.
Thank you. We have next question from the line of Mukesh Panchwani, investor. Please go ahead.
Sir, first of all, congratulations for good set of numbers. And I appreciate the way company has been maintaining good ROE, ROC and excellent profit margins. So my first question is that what is the size of hybrid rice market and vegetable seed market? And what is our share in this market?
Firstly, in terms of hybrid rice, the overall hybrid seed market is 65 to 77 tons. Okay. We have close to 7 to 8% market share in hybrid rice. And still we are growing in increasing our market share year on year. For example, this year the overall industry grew by 6 to 7%, between 5 to 8% this year. We are growing by more than 40%. So we are going much faster than the industry, and we tend to grow in the next coming 3 to 5 years. We tend to grow much faster than the industry. We have very good set of pipeline hybrids, and not only the large one, even the pipeline hybrids, we have very good set of hybrids. So we are pretty confident that we will beat the industry going forward. Sorry, what was your second question?
Vegetable seed market, sir.
Vegetable seed is a very big market, is growing at more than 20% year on year. Vegetable as a whole is like 2,000 crore plus market in India. And we are very small in vegetables. We don't command much market share. Hardly we do. We have done 20 crores of revenue last year. If you compare to first half, we have done 7 crores last year and we have done almost 16 crores this year. So we are almost up by more than 150% in terms of the revenues compared to last year. And we are very positive in terms of vegetables. We have introduced many new hybrids, especially in crops like chili, okra, and hot pepper. So these three are contributing for our growth and definitely will grow at more than 25-30% year on year in vegetables going forward. I think in the next 5 years, we will be close to 100 crores in vegetables.
Thank you, sir. We have next question from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Yeah, thanks for the follow-up. Sir, so we have talked about growth on the non-cotton segment, and next year again, we have indicated that we'll be growing. So given that the cotton acreage will remain same next year or probably degrow, which signifies that cotton revenues would be same as this year. So do we expect still a 10 to 15% overall top line growth, which will be completely driven by non-cotton segment?
We are confident in delivering 10 to 50% even next year at this particular duration of time. Even in cotton, we see the acreage is remaining sideways of 5%, but we are pretty confident that we might increase the market share as we have introduced new hybrids in Punjab, Haryana, which is also contributes to different sides of the overall market. So we are not seeing any threat in terms of cotton, but non-cotton crops, we are very bullish in terms of our performance of the crops and the placement where we have done. The type of response, what we are getting in these crops, we are pretty confident we will be achieving this figure going forward.
Yeah, and the second question is on the pipeline. So on non-cotton crops, how is the pipeline and what are the new product launches expected for next year? Thank you.
We have very good set of pipelines. Each segment has got a different set of pipelines, so it will be difficult for me to explain the number of varieties here, but we have a very good set of pipeline hybrids which are actually doing well in the market. One pipeline, some are in the testing stage and some are in the trialing stage. Both are very encouraging. That's the reason we are very confident that we will grow going forward.
Thank you, and Diwali wishes. Thank you, sir.
Thank you.
Thank you. We have next question from the line of Anshul Segal from Kotak PMS. Please go ahead.
Thank you for taking my question, and hearty congrats on great numbers. Two questions I have. For next year, what is the kind of sales mix that we are anticipating between cotton and non-cotton? This is for FY22.
Cotton and non-cotton, the mix will be same as this year. What we end up with slightly better in non-cotton margin by 2 or 3%, better than this year.
You are saying margins. I was referring to revenue.
I was talking about revenues. I'm saying the revenue section.
So which
means? You see mix.
Yes, please.
Last year it was like 50% cotton and 50% non-cotton.
Right.
This year we might end up between 45, 47%, 46% of cotton, 50% of non-cotton. Going forward, it should be 42, 43% of cotton and 58% of non-cotton.
Yes. Which means that in non-cotton next year, we could well see over a 20% kind of growth. If in cotton we maintain about 10 to 12% or somewhere between 10 and 15%, then non-cotton could well see more than 20% growth in revenue.
But what we say that cotton will grow in between 5 to 10%, non-cotton between 20 and 25%. So overall it should be between 10 to 15%. That's what our projection was, and that's what we are doing.
Okay. And for non-cotton, what can be the mix for next year? Can maize come back next year, and hence will the margin structure again move upwards for next year?
Definitely. This is the maize. We have grown by more than 30% in terms of volume and value this year for the first half. Second half, we may not grow in that fashion because last year we had a very good maize season last year, and now acreages are also slightly coming down. So this second half might be a slight impact, but the longer term, definitely maize is a very good crop, and we are focusing more on maize, and we have introduced many hybrids in northern India, as we have majority of the market shares in southern India, but we are growing in northern India, which is also a big potential market. So that's one of the encouraging points for us, and we have launched many hybrids in spring corn. For example, last year we launched in spring corn. These are the markets which are adding up. So definitely we are confident that maize and rice both will grow at more than 20%, in fact vegetables.
Thank you, sir. We have next question from the line of Manish Shah, an investor. Please go ahead.
Sir, my question was regarding to the buyback. Last buy completed in the month of January. So this year, after January, we will consider it, sir?
Yeah, our intention is to reward to the shareholder. Definitely, after once the 1 year is done with the buyback, we'll have again a board meeting and then we'll decide what will be course of action.
Thank you very much, sir.
Thank you. Ladies and gentlemen, that was the last question. I'd now like to hand the conference over to the management for closing comments. Over to you, sir.
It's been a pleasure interacting with you over the call. We thank you for taking time out and engaging with us today. We value your continued interest and support. If you have any further questions or would like to know more about the company, kindly reach our investor relations. Thank you.
Thank you very much, sir. Ladies and gentlemen, for Kaveri Seeds, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.